Уважаемые гости вебинара, всем добрый вечер. Очень радостно видеть вас сегодня в таком большом количестве наших участников. Меня зовут Маргарита, я являюсь менеджером по набору на программы высшего образования Банковского института. И мы с вами еще будем неоднократно взаимодействовать в рамках проекта «ФинАналитика, Митапы» и не только. Данную встречу можно считать официальным открытием проекта «ФинАналитика, Митапы». Как многие из вас знают, этот проект был изначально разработан для абитуриентов программ магистратур Банковского института, англоязычных программ, финансовая аналитика, финансы. И этот проект даст вам потрясающую возможность не только узнать много новой, полезной, интересной информации касательно финансового сектора, финансовой сферы, но еще и поступить на наши программы магистратуры без вступительных испытаний. Что нужно для этого сделать, я надеюсь, что вы все знаете, но проговорю еще раз. Вам будет предложено, во-первых, посещать встречи в рамках проекта, во-вторых, вам будет предложено выполнить задание от преподавателя. Первое такое задание вы получите сегодня, после лекции Анатолия Игоревича. И в-третьих, вам нужно будет в конце всего проекта написать итоговое ревью, ваши итоговые впечатления о проекте. И также в целом, наверное, это будет все. Но если вам потребуется дополнительная информация, я ее направлю после лекции вместе с материалами. Сегодня мы поговорим про альтернативные инвестиции. Подробнее об этом расскажет Анатолий Игоревич. Пока мы хотели бы у вас спросить, вот я вижу, что тут у некоторых есть проблемы со звуком, но так понимаю, что это единичные проблемы. Попробуйте в таком случае перезайти, точнее, в конференцию, потому что вижу, что у большинства все работает. Сейчас хотели бы спросить у вас, на каком языке вам было бы интересно прослушать сегодняшнюю лекцию, потому что у нас, как я уже сказала, программа магистратуры англоязычная, но лекции в рамках данного проекта мы реализуем на двух языках. Собственно, давайте дадим вам буквально парочку минут на то, чтобы вы написали. Вот я вижу, уже начали предлагать свои предложения.
Маргарита, спасибо. Я тоже от себя, наверное, спрошу. Guys, do we have anyone who does not speak Russian? Shall I speak English with you?
Yes, please. I'm here. I'm not fluent in Russian.
I will speak English. I will speak English then. No worries.
Yes, then it will be English. So, Anatoly Igorevich, the floor is yours.
Thanks, Margarita. Hi, everyone. Welcome to this program. I have two subjects in this master's program at HSE. And one of the subjects is called alternative investments. So today I wanted to quickly walk through my experience. Maybe you find something interesting for your career or for your professional interests. And also I would like to walk you through some interesting exercise that I was doing when I was working in Dubai, in a sovereign wealth fund in Dubai. So can everyone hear me well? All right.
Yeah.
Cool.
Yes.
So let me share my screen. I have a few slides for you. I think this will be easier to comprehend. And in case if you have any questions, please do not hesitate to turn your speaker on and just tell it out, because I do not see the screen while I show my slides. So please feel free to interrupt me and ask your questions out loud, okay? All right, let me start with the slides then. So, can you see my screen? All right.
Yes, we can see.
Great. Here's my working experience and some educational experience as well. So, few words about me. I graduated from Russian universities. I was studying in English. So in finance university and higher school of economics. I finished the bachelor's and master's here in Moscow. And then I started my career in investment banking. So I was doing mergers and acquisitions in Citi as an investment banking summer analyst. Then I joined Russian investment bank, Sberbank CIB, corporate investment banking, a long time back in Moscow. After that, I joined a new firm, Invest AG, private equity investor in Russia, big conglomerate with different assets in industrial assets and metals and mining and many others. And later on in my career, I also worked in the state-owned enterprise, which is called Rostec Business Development. I was doing private equity there as well. And then there was a period in my career for over 2 years and something. I was living and working in a sovereign wealth fund, Dubai Holding Investments, which is an investment arm of a big organization, real estate, I would say, fund, mostly owning assets, all real estate, infrastructure, hospitality assets in Dubai, which belongs to the ruler of Dubai, Sheikh Mohammed Al Maktoum. And last year, I came back to Moscow to continue my career here. And I work now as an investment director in Gleden, which is a private investor in real estate. So hospitality assets like Azimut Hotels, the largest hotel chain in Russia, and also office buildings and office centers around Moscow, and private equity investments as well in cheese factory, for example, in Moscow. So I have been doing private equity, venture capital, project financing, and many other investment-related and finance-related things throughout my career. So I'm happy to share my experience with you. If you want to contact me, feel free to contact me through Telegram. Here's my nickname, just P Anatoly. You can send me a message and I'm happy to reply. So if you have any questions about like career-wise or like some professional interests, feel free to ask me. Also, I'll be happy to let you know about the Banking Institute program. I have been I was invited in 2019, and in 2020 I started the course, and I think in 2021 and 2022, just before going to Dubai, I did this course on alternative investments. One course on alternative investments and the other course on project and venture financing. So if you join the program, you will definitely meet me here, and I'll be happy to tell you more about this subject. Any questions so far? All right, let's go further. So I tried to map what I have been doing over the last 10 years. And this is just a very simple map, what you can do in finance. This does not touch like business consulting or many other interesting career paths. But even in banking, you can still do many different things. So I was doing M&A advisory at Citi, and I was doing DCM, issuing Euro bonds, so debt capital markets in Sberbank, and even commercial lending and corporate financing in Sberbank as well. But today, I would like to focus more on asset management. That's what I was doing in Dubai Holding Investments most of the time. Of course, I also touched private equity there and some other asset classes. But today, my topic about the alternative investments would be around this career path. So if you are considering a career in asset management, I mean building diversified portfolio among different asset classes, you will learn something today. All right? So I want to start this story from SWF. So who knows what's the SWF?
Sovereign Wealth Fund.
Great, guys. So sovereign wealth funds are very different from ordinary investors. Maybe first difference you can notice the size. So AUM is assets under management. So this is the rank of the largest sovereign wealth funds in the world. And you can see like top 5 places like manage over $1 trillion. So you can see like Chinese and Japanese and even the UAE, the ADIA, the UAE sovereign wealth fund managing over $1.1 trillion. And on the right side, you can see this column called alternatives. So do you know what's the alternatives?
No.
So the alternatives is the synonym to alternative investments. And I will tell you more about this on the next page. But here I would like to highlight that many of the sovereign wealth funds, they start to focus and invest significant part of their portfolio into so-called alternative investments. So you can see ADIA is managing like a third of ADIA's portfolio is targeted at alternatives, at alternative investments. So what are, and like just a matter of fact, you can see line 17 is the Central Bank of Russia managing around $600 billion, sorry. All right. So here we are, strategic asset allocation. So earlier, maybe decades ago, the basic portfolio or the basic allocation of a sovereign wealth fund, or maybe like an ordinary investor, would be very traditional. So when we say traditional assets or traditional portfolio, we mean stocks, equities, bonds, or debt capital markets, as where I was working, and cash. So everything alternative to traditional investments is called alternative investments. And as you can notice that traditional investments are highly liquid and public. So this is usually publicly traded stocks and also publicly traded bonds. But alternative investments give you access to some different universe of asset classes, which are mostly private and not so liquid. However, giving you some opportunity to get extra returns or benefit from diversification. Is this clear what you can see on this page?
I suppose that it is.
All right. So if we go further, why do investors invest into alternatives? So why do we need these alternative investments? So here is a very basic chart that you might remember from your, I assume, bachelor's course on economics. And I would say that the traditional frontier, so on the vertical axis, you have the expected returns. Let's say in percentage, say the higher you go, you can get to like 15, 20, 25, maybe 30% expected income, okay, expected return. And on the horizontal axis, you do have your risk or volatility. So the further you go, the more volatile your portfolio is, or maybe if you select an asset which is very volatile, usually you expect high returns from the taking higher risk. This is very basic and fundamental law you have in finance. So if you take additional risk, this should be rewarded. This is not always the case. Sometimes you can get higher risks, but not higher returns. And this means it is suboptimal. So this is behind the frontier. So what we are trying to achieve by adding the alternative investments into a diversified portfolio is really getting above the traditional investments frontier, where you have only stocks and bonds, and getting to somewhat more optimal and better balanced portfolio. So imagine if you invest everything, if you have 100% investments in stocks, where do you expect to see your point? Let's assume this is going to be a point in time. So what are your expected returns and volatility on this chart if you invest 100% into equities? Where would you find it?
Well, if we are not taking into, well, our calculation the diversification, then I suppose that we'll find ourselves somewhere in the middle of the graph, the traditional investments.
Maybe in the middle, you're right. Maybe even closer to the right, depending on the industry you select. So, for example, if you select some technological or like high-tech, biotech industry, you can have extremely high volatility there, and you can be below the line, or you can be on the line if you invest into index. So if you invest into diversified portfolio of such shares. But what if we invest 100% of our portfolio into bonds? Highly likely, I will expect that you will get somewhere here in the very beginning of this line. So where you have much lower risk, much lower volatility, but still not very high expected returns. So again, this return to risk, return to volatility ratio should make sense. So adding more private equity investments, venture capital investments, maybe real estate investments, or even investments into hedge funds can get you to better position. You can get high returns with the same amount of risk, or if you choose, you can get same returns, but with the less risk. So again, every investor chooses for themselves, but the diversification is the only free lunch in investing. So that's what investors do buy in. And you can see from the previous chart, sovereign wealth funds do really want to diversify their portfolios, and they start to invest more into alternatives for this particular reason. Any questions so far?
Will you share with us this presentation?
I think so. I have already sent it to administrator, but yeah, let me ask them to share this with you. No problem.
Thank you.
Yes. So all the charts that you see, I put some sources here, so you can easily find these charts. They are publicly available. So don't worry, it's like not a very proprietary data. You can find this chart easily. All right, so here we come to the returns. So what are the 10-year expected returns these sovereign wealth funds target? If we look at the history, so not the expected returns, but the realized returns. So over this period from 2013 to 2022, on average, like one of the very big and one of the largest pension funds and sovereign wealth funds, their returns were around like 8 to 9%. So this is not what you typically expect from a private equity firm earning 25, 30% returns from leveraged buyout transaction. These are huge investors and they are very diversified. But still, if you think about these returns, these earnings, comparing to the growth of the global economy, so these guys are outperforming the global growth. So what's the global GDP growth over the last year or maybe last couple of years?
2.5 maybe.
Like from 2.5, sometimes 4. Really depends on the economic state and the economies that you pick up. But global growth is like less than 4%. So here, when you have your global portfolio, $1 trillion portfolio diversified, invested to different developed markets and developing markets, and you achieve 8, 9, sometimes 10% returns over 10 years, it's a very good result, because having earning high returns in the long term with extremely big portfolio is a very difficult thing to do. And remember, sovereign wealth funds, they think in decades, and they do not want to lose money, right? Like any other investors, but these investors are very, I would say, risk averse, and because this is the wealth of their nations, and they build wealth for the next decades. So that is what you should expect from such type of investor. All right. And when I did this exercise for Dubai Holding some time ago, we did this slide to decide which asset classes do we want to include into our portfolio and which asset classes we will not include. So think of it as my take on this exercise. So we grouped it into 3 big buckets: real assets, which includes real estate and infrastructure, which is basically very safe investments, usually very safe investments, and give you good diversification, but still you need to invest globally. So you need to diversify across different economies and geographies. But the key risk there is the illiquidity. So as any real estate asset or infrastructure asset, it takes some commissions and takes time to buy and sell. Like you do not buy and sell real estate or maybe infrastructure assets intraday, like what you can do in traditional assets. Sorry. So as for alternative investments, this does include, as I said, private equity investments and venture capital. Usually, some investors consider venture capital as the subset of private equity, and they can be right, but many times investors prefer to split these two because venture capital is high, it's much more risk, and usually this means the earlier stage of a startup or of a target company that you invest to. Even if we speak about venture capital funds and private equity firms, still the returns of the venture capital funds, they have estimated, they have higher expected risk and higher expected returns. So then goes private credit, a very popular asset class because of high interest rates on the markets, where you can get now very good returns at very moderate risk, very little risk because of downside protections and all these mechanisms that are embedded into loans that are provided. These are the private loans provided to businesses. And hedge funds and commodities and gold and digital assets are also other kinds of alternative investments. And some funds, some sovereign wealth funds, start investing into digital assets. Some other funds do not. So it's still a big debatable question when digital assets become stable asset class to invest in. But what we can see, and I discussed this on our alternative investments course, we have a separate module on digital assets, and we can see starting from 2024, as soon as Securities Exchange Commission approved investing into indices based on Bitcoin and Ethereum, this market, the digital assets as an asset class, became much more institutionalized. So please do expect more participants and more allocations in portfolios of big funds as well. And last but not least, traditional investments. You remember still sovereign wealth funds have to allocate trillions of dollars, and it's very hard to do just in private asset classes. You still have to invest into big companies and publicly traded companies in order to allocate this amount of capital. So don't be surprised that traditional investments are still part of portfolios of large sovereign wealth funds. Any questions?
Yeah, I'm sorry, one question. Through which mechanism does the investment into hedge fund serve as a diversifier in the portfolio?
Good question, thank you. So hedge funds as an asset class, they do have very different strategies. So there are macro hedge funds. There are like funds that invest only like very simple, like long short strategies. So if you invest into a hedge fund, hedge funds as asset managers, they do have this feature as they take short positions. Many times they can be able to earn profits during market downturns. So you might remember some hedge funds like betting against the market, betting on the downturns. So they can still have positive returns when the markets go down, when your private equity investments and many other asset classes will be declining because of the macro environment. Usually, like if you pick up the right strategy, the asset managers in hedge funds, they will hedge their positions and they will sometimes they will bet on the downside, so they can still get positive, uncorrelated returns. And that is the key role of investing into hedge funds for a big sovereign wealth fund or for a big institutional investor. So it's not just taking betting on one stock and like hoping that this will grow. It's an investment. It's allocating millions of dollars to a particular asset manager who will play diversified strategies, who will play arbitrage strategies, and who will try to earn with very low volatility. And typically, the returns of the hedge funds, they will be limited to 10, maybe 15% returns, but much smaller volatility compared to just investing purely into public equities or even private equity. Private equity and venture capital investments are considered to be very liquid and very volatile. Some investments just do not work out. You write them off. But if you do invest in in portfolios of these investments, if you do invest into private equity and venture capital funds, you get a more diversified exposure, and on average, you get higher returns with predictable, in a predictable nature, in a predictable way.
Thank you very much.
One question.
Any other questions?
Yes. As far as I know, some funds are buying spot assets for themselves. Can these be counted as alternative investments, or is this just out of this case?
No, if you just buy some Apple stock, this will go here. So some of the largest sovereign wealth funds, they are one of the largest investors in the world into these big global tech companies. So they might have stocks of Amazon, of Apple as part of their portfolio. But this will be considered in this bundle. So you will see these investments like still in traditional investments.
And
but if you want, yes,
talking about like football clubs, celebrities, etc., are these things? Do these things count as investments?
Yes, this is considered as an investment, and I do have a good report. I do remember a report done by UBS, who study not sovereign wealth funds, but institutional family offices. So family offices are investors with assets under management from $50 million till $2, $3, $5 billion. And they have a study on this, and they still consider these investments into art, investments into precious metals as a separate asset class, and they can treat it as an alternative investment. But still, you should remember, like, investments into art have even more higher time frame and more illiquidity. And I do not see so far that sovereign wealth funds have significant exposure to these asset classes. Even within this study, maybe I can show you this picture later. I will show it to you. I have this on my chart. It's less than 1% among 360, so 350 family offices surveyed by UBS. It was only around 1% who do invest into art. Most of the investors, they still play in traditional and alternative investments. I have seen the raised hand, please.
Yeah, Mr. Anatoly, this is
Yes.
Charles Chris. Please, I just sent a question on the chat, but I just want to go ahead and ask my question. Please, comparing investing in Bitcoin, the disadvantage and advantage of it, and the risk involved, I want you to break it down for me a bit. Is it profitable investing in trading online, such as Bitcoin?
Thank you for this question. We did have this question when I started this strategic asset allocation exercise for Dubai Holding. And back in 2022, when I did this, Bitcoin was still considered as a highly volatile. So it was extreme volatility, around 90% annual volatility in Bitcoin, which meant the returns that you can get, they were still not considerable as good, having such high volatility. But 2 years after, like in 2024, as I mentioned, since American Securities Exchange Commission approved trades, the volatility in Bitcoin reduced. It reduced to 40-30%, which is now comparable to volatility that you can see in some big tech stocks like Nvidia, which is very volatile as well, but is also very dependent on what's going on in crypto markets, etc. So big institutional investors, they do consider investments in digital assets, even though this asset class is very new and rapidly changing. So Dubai Holding still does not include this asset class into its portfolio because it's a more conservative investor. But I would not be surprised that in 5 years' time or maybe 10 years' time, many institutional investors will keep up and they will start including digital assets, not only Bitcoin, like maybe some blockchain related investments, maybe investing through venture capital into Web3 firms, etc. There are many ways to do it, and I speak more about it on my course on alternative investments. So we have a separate module devoted to digital assets. So yes, this instrument is becoming more popular, and the volatility in this instrument gets more, I would say, applicable, more normal. So you can afford this instrument in your portfolio now because of big institutional clients and big institutional wealth coming into Bitcoin and Ethereum and many other asset types. Okay.
Very much, sir.
Welcome. So if you want to learn more about different asset classes, I highly recommend reading this interesting book. It's called How to Invest by David Rubenstein. So he's a very famous person. He is the co-founder of Carlyle, and besides this, he's a journalist on Bloomberg. So this book is basically the set of interviews that he did, speaking to the best performers, so to these masters on the craft in different asset classes. So you can read this book like just picking the asset class you like. For example, you can pick private equity, and you will read the interview of one of the co-founders of Thoma Bravo, the private equity firm in America, the Orlando Bravo. He will talk about his views on the market and his experience in private equity and what they do in the firm. And if you want to watch it, just try to search it on YouTube. You can find these interviews live and just watch the asset classes that you want to learn more about. And I think most of these asset classes were covered in this book. So if you want to get more familiar with what's going on in each of the asset classes and learn from the best professionals, just go through this book and go through these interviews. I think you will find it interesting. All right, so here is the assignment that I wanted to give to you guys. And basically, this can be in a short form, like maybe 2 pages max. So maybe 2 pages essay. If you want, you can do some calculations and put it into appendix. So I wanted to play, I would say, this kind of practice, very close to what I did in Dubai Holding. So assume as you come to a sovereign wealth fund and you are requested to allocate like $100 billion into different asset classes. So you need to build your strategic asset allocation, so-called SAA. So imagine that you have the freedom to allocate as much capital as you want into any asset class you want over the next 12 months. So let's think about it and be very creative about it. And so then you are asked to see, like, based on the materials that I will share with you in a minute, based on this expected returns and expected volatility of your portfolios, try to answer these 3 basic questions. So number 1, asset class selection. So which asset classes would you suggest including in your portfolio, or maybe not including, and why do you think this is a good idea to include or not to include a particular asset class? And second question, as soon as you choose the asset classes that you like, second question would be like the target weights. How much capital, how much weight do you want to allocate to each particular asset class? And try to explain why do you think so? Why do you invest this much into equities and that much into alternative investments, etc., etc. And last but not least, let's see how your portfolio plays out. You can do a very simple calculation. So you can first calculate your expected returns based on your weights. So the weights of your asset classes that you pick for your portfolio. I will tell you where you can take this expected returns. And you can take this from the book that is published every year. And also you can calculate the volatility. The volatility is a tricky thing. It's not just multiplying the volatility by the weight of each asset class. When you calculate the volatility of the portfolio, and this is what you usually learn in the portfolio theory, you should also apply so-called correlations between different asset classes. So we call it correlation matrix. So I did this exercise for Dubai Holding when I just joined. This was my first work assignment. So I did this volatility, also called correlation matrix, in Excel, but still it's not obligatory for you guys. If you're not familiar or if you find it too difficult, then just try to do your primitive expected calculation. But if you are able to work with matrices in Excel, highly recommend you trying your best and calculating the expected returns and the expected volatility of the whole portfolio based on the weights that you pick. So the data that you can take for this exercise is publicly available. It is called the JP Morgan Long-Term Capital Market Allocation Assumptions, so LTCMA. It is updated every year, so you can download from the website. Here's the link on the right. You can download this book and go to the appendices, and you will see these matrices in the appendices where you can see the expected returns. I think it's a 10-year forward-looking 10-year expected returns for each sub-asset class. So for your exercise, feel free to pick any line you like, or maybe you can make a bundle. Just not overcomplicate things. For me, it's much more interesting to see your arguments. Why do you think it's a good idea? rather than just doing exactly good math and compiling big and hard matrices. I think you can find this assignment interesting, and you can try to do what asset managers and asset allocators do all over the world. And this is good books and good materials to start with. I can see the raised hands. Please ask your question. Please go ahead.
Can you hear me?
Yes, now I can.
Yeah. So I see that you're an ICF alumni.
Yes. I graduated ICF. It's the International College of Economics and Finance in same higher school of economics. And I do have lectures there. I'm also visiting professors there. I teach financial modeling and investment valuation course there.
Okay. And then I see that this program, this seminar, it's within the Banking and Finance Institute's program.
Yes.
It's a part of the Banking and Finance Institute program, which is different from the ICF program.
Correct. So,
right. So from your vantage point, right? How do both of them compare, particularly for someone that is edging towards a quantitative approach to investing program?
All right. So
I know that this faculty has a financial analyst program.
Mm-hmm.
Right. I don't know if you know about it.
I know about both. I'm teaching on both programs, but I'm alumni. I'm an alumni of ISF. So I can say about ISF because I graduated and I've finished it and spent 2 years studying at ISF. It is very demanding and it is much more, I would say, science focused. So you will be focused on quantitative methods. You will do lots of econometrics. You will do much more, I would say, scientific things at ISF. And in the Banking Institute at Masters of Finance, you are more focused on finance. So on some applicable, such things as investment banking, private equity. Also, there are other subjects for portfolio management. You can learn a lot here as well. It will be less scientific, I would say. So you don't need to do very hard calculus to study at this program at Masters of Finance. But if you are interested in more scientific and more deep research and you do love calculus and really advanced mathematics, I recommend exploring ISF as well.
Thank you.
Yeah.
Thank you very much. What about between both programs of this faculty? That is the finance and the financial analyst.
Yes. So the Masters of Finance is an online program. So you can study and work at the same time, or you can just study in one place offline, and you can still study at Masters of Finance online. It gives big advantage for those students who work or study international. And
so essentially, you're saying the difference between both programs are just the medium.
Yeah, I think like ISF,
the course content is mirrors each other.
I'm not sure. Like if I can compare to ISF is offline only, and ISF is a very demanding masters. But ISF is very different from Banking Institute. So ISF is demanding, and you should study. And I do not recommend trying to working and studying at the same time at ISF. The program is very demanding and it's very challenging. Banking Institute, many students that I have from Banking Institute, they manage studies and working at the same time, and it's very good. And there are many, I would say, professionals who do work and who do continue working where they are, and they pick these courses to like develop their skills and their knowledge in the finance.
Okay, thank you very much.
Welcome. I can see a raised hand, please.
Yes, first of all, thank you for presentation and the overview. So I have a question about our main topic. Well, as alternative investments, they become more accessible to retail investors, I would say. Do they actually lose that exclusivity that made them very attractive? Thank you.
Thank you for your question. That's a very good point. I would say that private equity investments, venture capital investments, they are still not very accessible for a retail investor. So the deals that I was doing in Dubai Holding Investments, they required like investment ticket of at least 500, sometimes like 50, sometimes 100 million of dollars. Not every retail investor can invest like 100 million into just one deal. It's very important, and you need to do many deals. You need to diversify. You cannot put all your money into one transaction. That's very important. So, but retail investors have some, I would say, proxy, have some ability to invest into private equity firms. So many private equity firms, like European firms, EQT, like I think CVC is another European firm who want to go public and become public. So you can still invest into private equity firms and have some exposure to private equity as an asset class, because you invest into a general partner, you invest into GP, you invest into asset manager who does private equity for you globally. So this is a good opportunity for retail investors to have some exposure to these asset classes if they seek for diversification. But of course, it really depends on the size of the investor. So when we say retail investor, it's usually the portfolio of, I would say, less than 1 million or less than 10 million of dollars. But for big investors, for big institutional investors, managing like at least 100 million of dollars, they play very different football field. So this is very good for retail investors that, like me being a retail investor as well, it's a very good opportunity to diversify your portfolio through exchange traded funds, like buying some shares at some ETFs that give you exposure to different asset classes. And that's very wise and that's very cost efficient for your portfolio. So I highly recommend doing this. But still, if we compare these to a big league, to these investors who invest billions of dollars globally, they still have access to particular deals that are not available to general public. So these deals are still very lucrative, and they usually they have very limited access to get into these deals. And that is how you can get the returns that are different from the wide market that is highly accessible. So from the theory perspective, like the more accessible the market is, the less information asymmetry is there, the more the market is efficient, the harder it is to beat the market, the harder it is to find some inefficiency in this market. But with these private equity investments and real estate investments, you still have this opportunity because you do not invest into index. You look for good opportunities and you look for some off-market deals. That's how you try to outperform. But this does not necessarily happens all the time. many times you can still invest into a private transaction and lose your money. So you should do this very wisely and do not expect that off-market opportunity is always something better than the market. It takes time to find the best opportunities and select and invest and be very consistent in this.
Okay, thank you very much for your answer. Appreciate it.
Yeah, welcome. All right. So if you do have any questions on alternative investments or any other like private equity, venture capital topics, I'm more than happy to answer. So feel free to send me a message in Telegram. That's where I can respond quickly. But also in terms of like if you have more questions about the Banking Institute program or the ISF program at the Higher School of Economics, I have studied here. Now I teach here. So I can tell you more about these programs as well, if you are interested.
Yeah, you didn't drop your email.
You can send me in Telegram. Telegram is very easy and very convenient. Just send me a message in Telegram.
Thank you very much. I have several questions for the program to understand the program better.
Yes, please. Happy to answer.
Yeah.
Okay.
All right.
How many time we have to complete the task, and where should we share it?
Yeah, this is the question to Margarita.
Yes, I think this is a question for me. So you have like more than a month. So let's agree that the deadline will be January 27. So you have some time to rest during New Year's holidays. And you should send it to my email. It's like it's already written in the like the email that you got about this conference, but I will send it once more with all the materials regarding this meeting. So I'll send you, I think it will be tomorrow, so I'll send you their both recording and presentation, and also all the information regarding the task. Okay?
Okay, thank you.
Can I ask you again? Will you send it to the email or do you have a chat in Telegram?
We have a chat in Telegram, but all the official information about the project it should be sent by email. So we send it with the materials.
How can I join the chat?
I can share the links here in Zoom.
Yeah, please, can you just display the Telegram? Okay, thank you. Thank you. Got it.
Yeah.
Okay, so just give me 1 minute. I will send all the links because we have several of them.
Meanwhile, could I ask a question, please, about the program?
Yeah, sure.
Yeah, hello. So thank you for the lecture. It was really nice. It was really interesting to hear too. And well, I got a question. Is it possible to study the program, and is it possible to complete the program if the job is taking like 60 hours per week? Is it okay? Is it possible? Or will it be pretty hard?
For me, it's very hard to judge, but I do have friends who joined the program and he's working very hard as well. And he manages to study on weekends and to do all the assignments on weekends. So still have weekends, and me myself,
Nice.
I'm a visiting professor, but I also do work like every week, and I do all my studies and all my seminars on Saturdays.
Yeah, okay, I see. Well, thank you a lot.
Welcome.
Yes, and let me add some words to this answer. So almost all our students work like a full day. So of course it's challenging. It's always kind of a challenge when you study and work at the same time. But most of our students are like they do excellent job with it. So no problem.
Okay, thank you a lot. Thanks.
And I've sent the links to the Zoom chat, so please follow our Telegram channel, follow our chats. And there you also can find the materials tomorrow. The link has okay. Just a sec. But I see people joining, so maybe one more time. Okay, I see that it's okay. Just in case, I will send all the same links tomorrow with the materials, okay? So for you not to miss them. Okay, and if it's all for today, I want to thank you all for joining our meeting. I want to thank Anatolий Igorevich for giving such an interesting lecture. I hope that it was useful for all our participants. So thank you all. And see you next time.
Thank you very much, guys.
Thank you very much.
Thank you for having me.
Thank you very much.
Thank you.
Thank you.
Bye.
Goodbye.
Thank you
Goodbye.
very much. Goodbye.
Thank you.